Hi traders, welcome back to another weekly workshop. I think it's about 2-3 weeks since I last published a workshop because recently I've been moving house and it really takes me a lot of time. So let's jump into today's topic, which is how do you avoid over trading. I think I've talked about this topic in the past, but I just want to make it again because I've seen this happening so many times among almost every single trader, even myself as well. Sometimes we tend to overtrade, as in we are having the FOMO, fear of missing out, to rush into the market and quickly just I want to get involved in any sort of action, and you don't care about the risk. When you are thinking that way, when you are taking trades that you're not supposed to take, as in it is not written down in your trading plan, it's not planned out, it's not something that you have prepared 110%, you take it, then often likely you guess what, you are going to lose money on that. All right, so let's go into the screen and let's talk about this topic. So overtrading is such a big thing in trading because overtrading doesn't just make you an unprofitable trader, as in long term, over 1 to 2 years time frame, you realize, hey, I'm making money sometimes, I'm making 5, 6, 7R on certain good trades, but overall, why am I still losing money? That's purely because every time after you make a bit of money, you have a good decent trade, you give them all back. All right, that is one of the biggest problems that's causing you to not really making money. It's not that you do not know how to find good trade. Every trader knows how to find a good trade. The big thing is, do you have the discipline and do you have a strategy, a system? All right, so what is the big sign of you are actually one of the over trading trader? The first big thing is actually your equity swings. So I want all of you to look at your equity swings and look at your P&L and see, do you often encounter situations where your equity just swing back and forth, back and forth, back and forth? A healthy equity curve should look like this. You might have periods where you have stagnation, you have hold in your equity curve, but overall you are still moving up. An unhealthy equity curve looks something like this. Why is this happening? Often this happens because first thing, you overtraded, second thing, you're playing way too aggressive. As in, you make a good trade, this only happens on your equity curve. This, if you make a good trade, then you immediately give all of them back. You have 1-2 losing trade, you are not able to recover from that. You are not able to calm down your mind, to stay disciplined and have the patience to wait for a good trade. Therefore, you give all of them back, and it goes even deeper than your initial equity. All right, that is one of the evidence. All right, big thing. So look at equity curve. You can look at my FX book or whatsoever. Second thing, which is you often encounter a huge drawdown. This is something that I've talked earlier just now. If you are constantly having big drawdowns, as in anything, I consider a big drawdowns as in 5 trade plus losses in a row. All right, for me, that is quite a big drawdown because psychologically and emotionally, after you lose 5 trades in a row, it's relatively hard for you to remain calm, stay patient, and look for the next best trade. Okay, what I'm trying to say? That's why I consider anything that's over 5 losses a huge drawdown. As in, if let's say every single week you encounter 5 losses in a row, every single week or every single 2 weeks, that is a big sign where you probably don't have a proper plan. You might have a strategy that's working, but you do not stick to it. You are eyeing over all different pairs, multiple of strategies. You are jumping here and there. That's why you don't have the focus. Therefore, your edge cannot play out. Your positive edge, as in, what is an edge? An edge basically means you are proven to be profitable in the market over the long term if you stick to a particular, specific strategy or trading style. Right? That is your edge, and it has to be tested. It has to have data to support it. You need to have a proper data, a proper backtested plan to know whether am I profitable or not. If you don't do your backtesting, high chance you are listening to someone else. Whenever you encounter a drawdown, you have no idea, hey, what is my maximum drawdown be like? I'm losing 10 trades in a row. Can it go deeper? Yeah, this is why you need to backtesting, because you understand what is your biggest drawdown on your backtesting, and how do you actually recover from that. Then you can find solution. Right? Is it normal or not? It's one of the big thing as well. If let's say right now you don't backtest anything, you don't have data to support whatever you are doing right now in trading, every time you encounter a big drawdown, it will get you panic, which is our third point. It will get you nervous because you don't know, what am I doing? What is my biggest drawdown? Can I continue trading this way? Etc. etc. So the third big point is you're constantly nervous. Why are you nervous? Because you're entering trades without clue of whatever's happening in the market. You're entering without a proper mindset. You're entering trades without a proper plan, which means you're taking random trades, right? You're taking random trades. Of course you get nervous. It's like going into casino. Why the hell every time when you gamble, you always get nervous and panic? Because you have no idea what's the outcome. Trading is fine. It's the same thing, because we do not know what is the absolute outcome of each and single trade. But the biggest thing is I know that I have an edge that is proven to be profitable over the long term, as long as I stick to them, as long as I don't ruin it. Right? That's why I'm here teaching all of you today, because I know in the long term, if I continue trading, I will make more and more money. I don't care about this day, this week, this month. What I care is long term. Long term is what you need to care the most. So if you're constantly feeling that sweat, feeling nervous while you're trading, high chance you are not taking high quality setups. You are taking bad trades. You're taking bottom trading because you feel like one of the things that I've discussed in the recent trade call, which is let's say you are looking to short on short pound yen at 156 right here. Price comes here, start running down. Instead of sticking to short, instead of waiting for price to come back to 156, you start taking a long here. Say, maybe I can take a long position here because it must go back. That kind of mindset will often triggers a lot of emotional decision. As in, take a trade here. This is the first step of ruining your own trading plan. Your plan was to short at 156. So why the hell do you take a long here? Is it because you got nothing to do? So you want to get involved in the market? That's what we call bottom trading. All right. Another thing is probably you want to short at 156. Price runs away. Then immediately you say, it's probably not going back. Let me short it here. Then boom, price goes back to 156. Come all the way down. Whenever you are not being disciplined, the market will discipline you. Get what I'm trying to say? Because a lot of times when you have a plan that was made before you enter any trade, and that's the essence of it. The essence of trading plan is the decision, the anticipation, the layout, everything was prepared before you are involved in any position, which means there is no absolute zero emotion involved in your trading plan. That's why I always say stick to your trading plan, because emotion only kicks in when, first thing, you're involved in a trade. Second thing, when the market are creating huge movement, as in we have spikes like this. Let's say you want to go long here, price all of a sudden does that. That triggers your emotion, triggers your adrenaline as well. All right, so remember, these are three big evidence that you are an over trading trader. So how do you actually prevent them? There's a lot of solution, but in this workshop, we're going to specifically talk about these 3 points. The first thing, having a plan. Simple as that. You need to have a plan every day, right before you take any trade. Have the patience, have the discipline to probably have a checklist or whatsoever to say, I've done this, I've done my meditation, I've done my workout routine, I've gone through the DXY, the yen index, the pound index, the news, etc, etc. I've looked at the high time frame, I've done this, that, then it leads to your entry time frame. Maybe it's the 15-minute chart, maybe it's the 5-minute chart. You cannot be jumping onto the market right away and look for trade, because that is basically a lack of discipline as well. You are breaking a plan. Right, you need to have a plan. It's very simple. What is the high time frame looks like? What is the overall dollar direction, which is DXY direction? Is there any news that might be an external catalyst that is causing the market to stagnate right now? Sometimes when you see market do that, that was because the next day or later in the evening, we got some major release on the New York session. That's why price is moving sideways just to push into one direction. All right, you need to know all of these things before you take any trade. Second point, patience and discipline to stick to it. Such a simple thing, but I don't think I've seen a lot of traders actually stick to it. You need to have the patience and discipline to stick to your plan. If not, what is the purpose of creating a plan? If you create a plan, you have to stick to it. Let's say your plan is to say, I want to take long on certain thing at $1. Let's say, imagine today you want to take long on certain things at $1. What if price do this? What if price retrace deeper? What if all these things? You need to have multiple scenarios laid out in your trading plan, in your daily trading plan, to make sure whatever comes to you, whatever alternative, whatever shock you have in the market, it doesn't affect you emotionally because you have everything planned out, prepared. That's why you don't care what is the different scenarios like. That's why every day, well, why is it so important for me to do the trade calls rather than being like some of those signals provider? They send you screenshots, random screenshots. In fact, a lot of them are not even a trader. Send you screenshots, tell you what's your entry, stop loss, TP be like. It's because when I'm doing a video, most of them do not dare to do that because they do not know what they're doing. I'm doing a video breakdown for almost half an hour every day to make sure you know what is in my mind. What am I looking for? If I say I'm looking to long pound dollar, what is the reason? What are the reasons behind it? What are the theses? Is there any data to support it? That's why I always say, whatever you want to do in trading, especially in the financial market, you need to have a reason. If you're looking to go long, go short on certain thing, what are the theses that supports you to do this? Reasonings, all right? So second point, simple. Have the patience and discipline to stick to your plan. You create a plan for a reason, not to ruin it. You create a plan to actually follow it. So stick to your plan. Don't break it. Trust me, you'll be fine. You might not be as profitable yet, but at least you will survive. All right, the third point is execution. So this is one of the biggest thing that I think a lot of us have this problem is I have a plan, I'm sticking to it, I'm being patient with my entry, but when it comes to execution, I just sort of doubt it. Is it going to work? Am I going to make money on this trade, etc, etc? So avoid second doubt comes from confidence, and that confidence comes from your preparation. All right, again, second doubts, avoiding second doubt, the main thing, it actually comes from your confidence, and your confidence comes from how much do you have you prepared. Right? If you have enough preparation for whatever you want to do, trust me, when it comes to execution, it's easy because you're confident. Even if you're wrong, you know it's fine. I've planned everything out. If I were to lose on this first chance entry, I can go move on to the second chance entry. Now I can just take a step back, set an alert, wait for price to go to my order, or wait for price to go to my alert. Execution, remember, be confident in whatever you're doing in the market, because if you don't have the confidence, if your confidence level is low, which means your self-esteem is probably at low as well, you have to fix it. All right, becoming a trader, becoming a good trader is all about being confident while you're trading the market. Because if you're not confident, high chance when you want to click the buy and sell button, when you want to scale up partial, when you want to move stops to break even, you always ask yourself, should I do it? Maybe I don't do it. Maybe later. All right, all these are just bad things to do in the market. If you have a plan, have the discipline to stick to it, then execute. It's that simple. That is the 3 easiest way
to become a consistently profitable trader. All right, so that's it for today's workshop. Hope you all learned something new. Remember, over trading is a very, very important thing. Often most of the traders that I've coached over the years are not a bad trader at all. Most of them, yes, they are losing trader, but they are not a bad trader. They are just an undisciplined and indisciplined trader, or someone who is constantly being nervous, just overthink and overreact. All right, trade safe, take care, and I'll talk to you later.